Good evening. Thanks very much for joining us on India Business Hour. I'm Shereen Bhan. The top story tonight, the big data that we're going to be watching out for. Second quarter GDP numbers will be released tomorrow. And ahead of that, a poll conducted by CNBC TV 18 shows the economy is likely to have contracted by 8.9% during the period. Now, while this is a significant pullback from the almost 24% contraction in Q1, it will mean that India has entered a technical recession for the first time. Lata is standing by with the key highlights from the poll. Lata, what are the numbers telling you?
Well, the GDP for July, August, September, or the second quarter is going to be announced, and a CNBC TV 18 poll expects that the economy would have contracted by 8.9%. Okay, this is the year ago number, and this is quarter ago of quarter one, April, May, June, which of course was a terrible quarter, minus 24. Now, another way of looking at the GDP number is as GVA, gross value added. Not very different from GDP. You subtract taxes and add subsidies and you get the GVA. So by GVA standards, the economy would have contracted by 8.6% compared to 23% in the first quarter. Now, originally we had got estimates of minus 10 and minus 12 for the second quarter. But after this data, GDP is a combination of EBITDA of all companies plus wages plus taxes. Now, when the second quarter numbers came, we found that the EBITDA of all the listed companies had risen by a way higher than expected 40%. Now, after seeing this higher EBITDA, a lot of people have, decreased the contraction expectation. JP Morgan is the data we are quoting. They also upgraded their GDP forecast from some minus 9 or minus 10 to minus 7. But all economists, after looking at the EBITDA of the listed companies, which was announced, they have been upgrading the GDP number. Now, this is the internals of the GDP. Whatever is yellow is our poll, okay? Now, as you can see, only agri and power are actually still in positive terrain. The rest, mining, manufacturing, are all in negative terrain. Though, of course, they are not as bad as Q1, which is shown by the green bar. Public administration is what government is spending. There again, government has not spent much in Q1 and Q2. But the positive I want to point out is that many people have now reduced their estimate of contraction. They don't expect the economy to fall much. For the full year, we got a number of minus 8%. Now, this is much better than the minus 10 and minus 14 that we were getting about 4-5 months back. Even the RBI number, you will notice, the last number we got from RBI is minus 9.5 for the full year. Most economists believe the RBI will also bring down the forecast and say the economy is not so badly off. It will contract, but it will contract probably by 7 or 8%. In any case, all those estimates will depend on what we get from the second quarter GDP. This perspective is only to show that, yes, COVID hit us badly, but we appear to have been slowing from a very long time. 7.1 even in the first quarter of 2019. We never saw 7% after that. And then we have given up even the 5 handle even before COVID hit us. It's good to remember that hopefully the COVID number, if it doesn't come as bad as 8.9, then we will get further upgrades to the full year economy.
After witnessing a sharp contraction in GDP by 23.9% in the first quarter of the current financial year, and a multi-speed normalization of activity in the second quarter, the Indian economy has exhibited stronger than expected pickup in momentum of recovery.
I think the second quarter has seen a significant improvement in the activity level, and I would correlate it with the unlock situations happening in various towns and cities in the country. And I would say that as and when and wherever we have seen the unlock happening, we have seen the demand revival. And demand revival itself has kick-started the economy. And that is something, one of the reasons why all of us are expecting a significantly lower contraction as at the end of the second quarter.
Mm-hmm. So what's the number that you're going with in terms of contraction for Q2 and for the full year? The RBI's forecast or estimate was 9.5% contraction. Do you believe that it will be better than that?
My expectation is it should be between 8 and 9.
You can catch my entire conversation with the SBI chief at 9:30 p.m. only on CNBC TV 18. Staying with the economy, despite some green shoots being seen in the last few months, the FMCG sector may witness a contraction of up to 3% in 2020. And that's the word in from research and analytics firm Nielsen. Remember, Nielsen had earlier forecasted a decline of up to 1% for the sector this year. Mangalam joins us now with a summary of the report. Mangalam, what's Nielsen saying?
That's correct. So a lot of insightful data points that came in from the Nielsen's presentation that they made to the media. A handful of them right up for you. The first one, of course, is the fact that growth has recovered across all segments, and in that, home and personal care has seen the sharpest growth. Now, this is positive from a stock market standpoint for the larger FMCG players, the likes of Godrej Consumer as well as Hindustan Unilever, because this was the segment that did not do too well for them for the past couple of quarters. The second thing that really stood out was rural areas continue to drive growth. They've grown at 10.6%. And that's higher than the average rural growth that we've seen as against urban growth, which stands at around 1.3, 1.4 times. And, in that itself, North is a region which is growing much faster and West is still suffering, presumably because of the weakness that we're seeing in metros like Mumbai, etc. Now to the most insightful points. Packaged goods as well as hygiene products are selling more in rural India as against urban India. The growth rate in rural India is 8 to 11 times. So that's telling you that the long-term trend of increased packaged branded goods and hygiene products, which were erstwhile considered to be more urban in nature, are now penetrating much faster into the rural area. There could be two factors for that. One, increased awareness because of the pandemic, and secondly, the migration from urban areas into rural areas could be driving this consumption higher. So that's a positive over the near future. And they also saw near 3,000 new launches in the health and hygiene space itself. So put all these things together, the headline, while they say that they've trimmed their growth expectations for this entire year from +1 to -1% to about -1 to -3%, the trends that they spot about stronger rural growth, higher penetration of categories into the rural areas, and newer launches and increased share of e-commerce, these are medium to long-term positive for the FMCG space.
All right, Mangalam, many thanks. Now, a quick check of the latest on COVID. Active COVID-19 cases in India have risen for the second day in a row, increasing by over 7,500 in the last 24 hours. With this, India's coronavirus tally has crossed 93.5 lakh. Around 1.35 lakh people have succumbed to the virus so far. Testing, around 10.9 lakh samples were tested in the last 24 hours compared to 11.59 lakh samples the previous day. The mortality rate continues to hover around 1.46%. That's been the situation for the last 5 days. Remember, Prime Minister Modi has asked states to try and bring down the COVID fatality rate to 1%. Some of the other COVID-related headlines we're tracking. The aviation regulator has extended the ban on international commercial flights to the 31st of December. However, certain flights may be allowed on select routes on a case-to-case basis. Oxford University and AstraZeneca acknowledged that some of the vials used in their trials did not have the right concentration of COVID vaccine, so some volunteers got half a dose. But they add that the problem has been corrected. There are questions, however, being raised on the lack of disclosure. Prime Minister Modi is scheduled to visit the Serum Institute in Pune on the 28th of November. Remember, Serum Institute has an agreement with AstraZeneca to manufacture the Oxford University vaccine Covishield. The government has formally notified the operational guidelines that will govern the 100% emergency credit guarantee scheme. This is the scheme that had originally been thrown open to 10 sectors. It has since been expanded to cover 26 sectors as identified by the Kamath panel. The expanded scheme will stay in effect till the 31st of March 2021 or till the balance 1 lakh crore rupees as part of that 3 lakh crore rupee package is exhausted. Ritu Singh joins us now with the details of the expanded scheme. Ritu, anything surprising there in the guidelines?
The government has announced operational guidelines for Emergency Credit Line Guarantee Scheme 2.0, which, remember, was expanded to include 26 stress sectors as identified by the Kamath Committee, plus healthcare, which was additionally included. The big takeaway is that the overall amount of 3 lakh crores envisaged under the scheme originally has not been increased, and given that banks have already utilized about 2 lakh crores, only the 1 lakh odd crores that is remaining is what will be made available to these 27 new sectors that have been brought under the fold. Under the first scheme, given that it was for small borrowers, to be eligible, borrowers had to have an overall turnover limit of up to 250 crores and total loans outstanding of up to 50 crores only, whereas in the second scheme, they can have loans between 50 to 500 crores and there is no ceiling on the turnover, that is annual turnover. In the first scheme, up to 60 days past due as on Feb 29th were eligible, whereas in the second scheme, it is more stringent. Borrowers with only up to 30 days past due will be eligible to apply under ECLGS 2.0. There is a 4-year repayment window under the first scheme, but it is longer under the second scheme of 5 years, given that these are larger borrowers with larger loans that they will be taking. The scheme is valid until the 31st of March next year, but loans under the scheme can be disbursed until June 31st next year, that is 2021. Interest rates for both are capped at 9.25% for banks and 14% for NBFCs. Under the first scheme, lenders have been asked to give an opt-out option, which means it will be given to all unless they choose to opt out, whereas in the second scheme, it is an opt-in only. So overall, quite a few changes that have been brought about in the scheme. The first scheme was not as successful. Now we'll have to see if the second scheme really is able to exhaust that entire 3 lakh crores and if that becomes a limiting factor to be able to help these stress sectors.
All right, Ritu, many thanks. That's the ECLGS 2.0. Now, the merger of Lakshmi Vilas Bank and DBS Bank India will go ahead as scheduled tomorrow. That's the 27th of November. The Bombay High Court has refused to grant an interim stay to the scheme of amalgamation. It was hearing a petition filed by a group of LBB's promoter entities. Yash joins us now with more. Yash, interim relief not granted.
Well, Shereen, as you rightly pointed out, the Bombay High Court today heard a writ petition filed by a group of promoter entities of Lakshmi Vilas Bank challenging the scheme of amalgamation between the ailing South Indian lender with DBS Bank India. Now, as far as the verdict goes, the Bombay High Court has refused to grant any interim relief to the promoter entities. They've refused to grant any stay on that scheme of amalgamation between the two banks. This after the promoter group entities argued that steps taken by the Reserve Bank of India are in utter haste and with total non-application of mind. They also argued that the Section 45(5)(f) of the Banking Regulations Act requires RBI to take consideration of all stakeholders, including the members. However, in the case of Lakshmi Vilas Bank and DBS Bank India, the shareholders of LVB are completely being wiped out, which is not right. To which the RBI Council also argued that continuity of the financial system, economy, and importantly, depositor interest is most important, and shareholders are always risk takers who run the risk of investment becoming zero. The court at this point of time seems to be going with the arguments of RBI, saying that at this point of time, a stay cannot be granted. The stay sought is monetary in nature and it can be granted at the time of the disposal of the case as well, and particularly not now at this point of time. The matter is again adjourned till December 14th, where further arguments from both parties will be taken forward.
All right, Yash, many thanks for joining us. That is the latest on the LVB-DBS Bank merger. FC Kohli, the first CEO of Tata Consultancy Services and regarded as the father of the Indian software industry, has died at the age of 96. Kohli, who joined Tata Electric Companies in 1951, parachuted into Tata Consultancy Services as a general manager, a pioneer in the tech revolution in India. He played a formidable role in building the $100 billion IT industry. He was also actively involved in the decision to bring IBM to India as part of a Tata IBM, a JV for hardware manufacturing. IT industry veterans have been paying rich tributes to FC Kohli. Infosys co-founder Narayana Murthy said Kohli has laid the foundation for a strong TCS. Wipro founder Azim Premji hailed him the true pioneer of the Indian IT services sector. N. Chandrasekharan, the chairman of Tata Sons, said FC Kohli was a true legend who laid the foundation of India's IT revolution. And may he rest in peace. It's time now for us to head into a break, but coming up next, Prime Minister Modi once again makes a strong... Here's a quick look at some of the other headlines that we are tracking. Indian equities bounced back after yesterday's sell-off, the Nifty reclaiming 13,000 in intraday trade, the Sensex ending near the day's highs after recovering more than 200 points from the lows. DHFL's erstwhile promoter Kapil Vadhavan moves the NCLT against the RBI-appointed administrator, and the Committee of Creditors says bids received for the company's resolution are absurd. Asked that he be allowed to participate in the COC meetings. Also asked that his September 2019 resolution plan be evaluated by an independent expert appointed by the NCLT. Confectionery major Mondelez India says the demand during Diwali has been better than expectations. The company's president Deepak Iyer tells CNBC TV 18 Mondelez is betting on further improvement in demand and is ready to deal with the ambiguity caused by the pandemic.
What we are seeing, and hence that is what we are betting on, is sequentially, month on month, our business is improving. Right? That is the insight on which we are saying we want to stay positive and see how we can build out. But in these kind of environments, it's not a perfect market. There's no perfect information. So you have to deal with ambiguity. You have to be comfortable that I don't know the shape of things to come. So how do I have 2 or 3 scenarios, and how do I be agile and flexible to play all of that?
Well, that's Mondelez. And Arvind Fashion CEO designate Shailesh Chaturvedi tells CNBC TV 18 they've seen better than expected demand for Diwali this time around, with sales coming in at 80% of last year. Chaturvedi says the focus now is on revitalizing their 6 core brands, which will see traction hopefully post-pandemic.
We've gone steady consistently. There is an improvement in July, August, September, and we have now crossed 50% of the revenue. And if you look at recent Diwali festival, we've crossed more than 70% of the revenue. So there's a consistent revenue increase since the Unlock 4 that happened in September. Most of our stores are now running, and consistently the business is coming back to normal now. This Diwali has gone as per plan, and in fact slightly higher than the plan, and we saw good demand across the country for this Diwali, where when you look at Diwali to Diwali business, we close to 80% of the business.
That's Shailesh Chaturvedi. Now, Prime Minister Modi has made a strong pitch yet again for one nation, one election, calling it the need of the hour. Speaking at the concluding session of the 80th All India Presiding Officers Conference, Prime Minister Modi argued that elections taking place every few months hurts development. The Prime Minister has also pushed for an easier process to repeal outdated laws and pointed that this is already being done with a few laws through the insertion of a sunset clause.
One nation, one election. सिर्फ एक चर्चा का विषय नहीं है, बल्कि ये भारत की जरूरत है। हर कुछ महीने में भारत में कहीं न कहीं बड़े चुनाव हो रहे होते हैं। इससे विकास के कार्यों पर जो प्रभाव पड़ता है, उसे आप सब भली भांति जानते हैं। ऐसे में वन नेशन वन इलेक्शन पर गहन अध्ययन और मंथन आवश्यक है। हमारे कानूनों की भाषा इतनी आसान होनी चाहिए कि सामान्य से सामान्य व्यक्ति भी उसको समझ सके। हम भारत के लोगों ने इस संविधान खुद को दिया है, इसलिए इसके तहत लिए गए हर फैसले, हर कानून से सामान्य नागरिक सीधा कनेक्ट महसूस करे। समय के साथ जो कानून अपना महत्व खो चुके हैं, उनको हटाने की प्रक्रिया भी आसान होनी चाहिए।
Well, that's the Prime Minister. And speaking of laws, some of the clauses in the 3 farm laws passed by the government continue to stir up the farmer community. Chaos ensued at the Punjab-Haryana border as protesting farmers from Punjab tried to march towards Delhi. A showdown occurred after the police used water cannons to disperse the protesters. Heavy security has been put in place. Barricades have been put up along various stretches of the Delhi-Haryana border to prevent farmers from entering the capital. And the tension prevails there. With that, it is time for us to wrap up this edition of India Business Hour. Thanks very much for watching. Do stay tuned. The news continues here on CNBC TV 18.